Also get the gold loan bit because that indication came from Delhi, and I think it's been followed through from the Reserve Bank of India. So these are meaningful relaxations which have come through. Ritu is here with what's happened. Ritu.
Well, Prashant, first, overall for the sector, falling interest rates are never good for banks. It affects their margins. But that said, most of the bankers we've been speaking to have been talking about somewhat of a turnaround by the third quarter as liabilities also balance. For NBFCs, of course, this is good because the cost of borrowing comes down. But for gold loan lenders in particular, there is lots to cheer for because the draft rules which had come out were already much easier than what the street had feared. And now further relaxations have been announced by the Reserve Bank of India. What are these relaxations? To begin with, the loan-to-value cap for small ticket loans of up to 2.5 lakh rupees has been relaxed from 75% earlier to 85% now, which essentially means if the gold, for instance, is valued at 1 lakh rupees, earlier lenders could give a loan of up to 75,000 rupees, which has now been extended to up to 85,000 rupees. But important to keep in mind, they should also include the interest component along with the principal. So that LTV has to be maintained throughout the tenure of the loan. The second relaxation is that for small ticket borrowers of up to 2.5 lakh, in general, they will be exempted from any sort of additional credit appraisals to make it a lot easier for lenders to lend to this category of borrowers. And as far as the use of gold loans for commercial users is concerned, the end-use monitoring will only apply for those gold loans that are taken under the priority sector lending. So a slew of relaxations being announced for gold loan financiers. Yes, as you rightly pointed out, the North Block very clearly making recommendations that small borrowers of up to 2 lakh should be exempt from these stringent requirements. And the Reserve Bank of India has followed through on how the biggest gold loan lenders, the likes of Muthoot, for instance, where almost 95% of the book is gold loans and nearly half of the book is to small ticket borrowers. These lenders stand to benefit significantly. They can extend more loans. This will boost loan disbursements. This will attract more borrowers and, of course, improve their earnings on the back of this. And then Manappuram, CSB, City Union and IFL are some of the other lenders that will, benefit from this.
Okay, all right. And a lot of those stocks are rising exactly for that reason. Ritu, thank you very much for, all the context over there. There you go, a rally between 5% to 6.5% on the key gold financiers. Let's take